Thinking about going solar in 2025? You've probably heard about the 30% federal solar tax credit. But what is it really? Who qualifies? And how much can it save you? In this video, we'll break down everything you need to know about the solar tax credit, state incentives, hidden rules, and money-saving strategies so you can make the most of your investment before any changes hit. The Federal Solar Investment Tax Credit, or ITC, lets homeowners deduct 30% of the cost of their solar energy system from their federal taxes. This isn't a rebate or a check in the mail. It's a tax credit, which means it directly reduces the amount of federal income tax you owe. So if your solar installation costs $20,000, the tax credit could reduce your tax bill by $6,000. It applies to both solar panels and battery storage, even if you add batteries later, as long as they're charged 100% from solar. To qualify for the credit, here's what you need. You must own the solar system, not lease or use a PPA. The system must be installed on your primary or secondary U.S. residence. It must be new or used for the first time. You must have enough federal tax liability to claim the credit. If you're a renter or lease the panels, the credit goes to the system's owner, usually the solar company. For landlords, properties you rent out full-time do not qualify. But if it's a vacation home you use part of the year, you might qualify for a portion. Check with your tax advisor. The tax credit covers more than just the panels. You can also claim solar panels or PV cells, inverters and mounting equipment, wiring and installation labor, energy storage batteries, sales tax on eligible equipment, tree trimming if it improves solar performance, electrical panel upgrades, trenching permits, and inspection fees. However, roof replacement costs are not covered, unless you're installing solar shingles like Tesla's solar roof, where the roofing material itself is also generating power. To claim the 30% credit, your system must be placed in service during the tax year. That means fully installed, permitted, inspected, and approved by your utility. Keep your permission to operate letter and installation receipts. The IRS may request these if you're ever audited. The 30% rate is available through 2032, but there's no guarantee it won't change sooner, depending on future legislation. In 2024, there was a massive rush when changes to net metering hit California. Expect a similar bottleneck if federal or state incentives get reduced. So don't wait until the last minute. Claiming the solar tax credit is straightforward. If you file taxes yourself, fill out IRS. Form 5695, Residential Energy Credits. Enter the cost of your solar installation. The result will carry over to your 1040. Most tax software like TurboTax and H&R Block will guide you through it. If you use an accountant, just give them your receipts, contract, and the installation date. They'll handle the rest. And remember, the tax credit rolls over if your tax liability is too low to use it all in 1 year. Want to take full advantage of the credit in 1 year? Here are some smart tax strategies. Talk to a financial advisor before trying these. Roth conversions. Move money from traditional retirement accounts to Roth IRAs to increase taxable income and use up more of the credit. Tax gain harvesting. Sell appreciated investments to trigger capital gains tax, offset by the credit. Adjust withholding. If you expect a big refund, lower your W-4 withholdings to keep more of your paycheck this year. These tactics don't increase your taxes overall. They simply help you make room to use the credit all at once. Beyond the federal credit, many states offer additional incentives. Here's a quick overview of some major ones. California. Rebates for battery storage through SGIP, net billing for exported energy. New York, 25% state tax credit up to $5,000 plus NYSERDA cash incentives. Massachusetts, $1,000 state tax credit plus property tax exemption plus smart incentive payments. Illinois, solar renewable energy credits, SRX, pay you per kilowatt hour produced. New Jersey, successor solar incentive, SUSI program for energy generation. Texas, local property tax exemptions and some utility rebates. Florida, property tax exemption and no sales tax on solar purchases. Arizona, $1,000 state tax credit plus property tax exemption. Colorado, sales tax exemptions and utility-specific rebates. Oregon, up to $5,000 off through the Oregon Department of Energy. Maryland, $1,000 residential grant plus solar Surex. South Carolina, 25% state income tax credit, stackable with the federal credit. Visit dseriusa.org or your state's energy office for updated info. we generally recommend buying your system, whether upfront or through financing. Why? Because only the owner of the system qualifies for tax credits. If you lease or sign a power purchase agreement, PPA, the solar company takes the credit, not you. However, in rare cases where financing is difficult, leasing or a PPA can be better than doing nothing, especially if electricity rates are high where you live. How long do solar panels last? Most come with 25-30-year warranties. Maintenance is minimal, usually just occasional cleaning and monitoring. Most people pay off their system in 5 to 8 years and then enjoy decades of free electricity. That's a real return on investment, especially as utility rates continue to rise. So, should you go solar in 2025? If you want to lower your electric bill, increase home value, and take advantage of thousands in tax credits, the time is now. Don't wait until the end of the year when installers get booked up. Visit your state's incentive page, talk to a trusted installer, and reach out to a CPA if you want to optimize your taxes. If you found this video helpful, give it a thumbs up and subscribe to Happy Greener World for more solar insights every week.